Hello, Nawojka. It's great to see you, and thank you for taking the time to join us today. Um, as you know, we've had a lot of volatility in the gold market. Price of gold has gone down considerably in the short term. So there is a lot of anxiety and apprehension among clients who purchase gold, especially in 2025 when the trend was completely upward. And a lot of the long-term stories and trends might still be intact, which is why I would love to see your take about the current situation in the markets and how you see the future.
Okay, first of all, Tina, thank you for having us. It's a pleasure to be here. You're right. The volatility it has been quite significant, and I'm not surprised that everyone is anxious with that level of volatility and uncertainty. I think, as you mentioned, the big picture, that we have no change in our view. And the fundamentals and the reasons to own gold remain very much intact. Um, you know, in the background, we still have those central banks continuing to purchase gold. They're set to sort of have similar purchasing levels as they did in 2025. So that makes me comfortable. And I think the reason to diversify away from that US dollar and for central banks to continue to do that remains very much in place. So that's really important. So that's a check mark for me. And of course, in the broader market, obviously massive change from a geopolitical perspective. And that's really what precipitated this correction. And it's not just a correction in gold, it is a correction in the broader market as well. So, with the unrest in the Middle East, really um, a huge level of uncertainty around, economics, global economics, inflation, and in terms of gold specifically, I think two things, or actually three things, really created most of the, I guess, perceived risk. One is the U.S. dollar strengthened, right? So that's a negative for gold. And secondly, the market and the world started thinking a little bit more about inflation and the impact of higher oil for longer. And with higher inflation expectations, obviously the expectations for rate cuts started to come down. And so those two factors from a big picture, I think were the main driving force. But I think probably the biggest culprit in terms of like what actually drove gold and the gold equities specifically down really is that broader market sell-off. So investors moved to cash. We saw outflows out of the ETFs. And then, in that kind of correction, investors have margin calls and they have to use some of the winners to cover those margin calls. So I think gold, because it also, gold and the gold equities, because they had been so strong, became entangled in that. And so I think that really added an additional level of selling specifically for gold and the gold equities because they had been the winners. And so I think that those three things together resulted in that massive corrections we saw. And I think it's really interesting to notice that we have really gold stabilizing and really trying to find a technical support level around 4,500. And of course, as soon as yesterday we saw a little bit of relief or perceived relief that the Middle East conflict is going to come to resolution, right away the gold price took off and the equities took off with it, and we had a really, really healthy day in the market. So that trade really wants to come back and wants to come back strong. So I very much think about this as an opportunity, not an end to that big picture positive trend that we have in the gold space.
So you pretty much segued to my next question, which was because both you and I have been in the markets for a long time, and we've seen these kind of dips and big price swings, especially in
Yep.
gold. Uh, do you see this particular situation as a buying opportunity or as an opportunity for those people who were overexposed to gold and kind of got carried away with the momentum that it had in 2025 to maybe trim their positions. What is your feeling?
Well, to be honest, I personally look at this as a buying opportunity, and I'm very much, looking at this, looking at some of the stocks and the valuations that are out there in the market, and I just can't help myself. I just really, I see the opportunity there, and I'm quite comfortable. Um, Buying at these lower levels, knowing that in the end, I'm buying some very strong companies, some very, very attractive valuations. So for me, unfortunately, as a portfolio manager in a closed-ended fund, very often when these opportunities come out, you actually have outflows. And so sometimes you don't have as much cash as you
To
hope
go
you did,
shopping.
right? So that's my biggest frustration is I wish I could buy more, to be honest.
Yes, it is a
And
conundrum.
yeah, exactly. So we very much we did have cash sitting on the sidelines into that correction, and we did take advantage of it. And so we're feeling pretty comfortable, to with the portfolio as we head out now and see that bounce.
Fantastic. Now, you also manage the Mining Evolution Fund that invests not just in gold, but many other metals. Where do you see the opportunities in other metals going forward?
Well, to be honest, those critical minerals and some of those other metals have actually been a very good place to hide in this correction. They actually have done very well. That Mining Opportunities Fund is still up plus 20% year to date. So while the gold price took a big hit, some of those other metals actually performed quite well. Like the uranium stocks held in really well. The copper actually held in really well, outperforming gold in this correction. And lithium has held in, and a lot of those critical minerals. So, I guess the opportunity set has been more on the gold side in this correction than it has in the other ones. But we could, when there is a disturbance in the markets and the drawdown, then we would obviously take some more positions in some of those other commodities where we can for sure.
Okay, fantastic. And Navoika, you've answered the big questions that are on everybody's mind. I really appreciate your time. This was a great conversation, and thank you for doing a great job managing the funds that you're in charge of. Thank you so much.
Thank you so much, Tina, and thank you for the opportunity. And we will speak to you soon.
Yes, thank you.
Thank
Bye
you.
bye.